We take a dispassionate view of our investments. Does it mean that we are looking out to monetize the investment? That's not correct. Sure. But if we get an offer that we cannot refuse, as I say, then it's not that we are not, that we will still hold on to the investment. Let me take the classic case of the branded generic business, which we sold in 2010. We were not sellers. We were investing in that business till the last day. But when we got an offer, which was like 30 times of EBITDA, and it was 9.5 times sale, then it made sense for us, again, as I said, as a trustee, that was in the best interest of all concerned, and that's why we did it. So we continue to work in each business as if it is there forever. But if there are such situations, or if a business doesn't work out, I mean, let me take another example. Everybody only talks about a successful exit. We were doing basic drug discovery and research, and we had spent more than 10 years in that space. And then we realized that the risk was too high and the reward was not adequate. And therefore, we actually scaled it down. So it's both ways.
Off late, you've been probably hitting the right notes more than the wrong ones, and you must be getting offers as well. So, no, I'm just kidding. I don't think we are talking about what you're looking to exit or what not. But let me ask this to you the other way. What would be the right way to look at your business right now? I mean, you've grown in size. The market is adequately, in a manner of speaking, rewarded the stock as well. You're a very large company now. Are you a mature healthcare business with a financial services arm that is growing rapidly and eventually becoming a large financial service behemoth? Is that the way Piramal Enterprises is progressing over the course of the next 5 years?
That's not how we look at it. We feel that each of the business segments that we are in, whether it's in healthcare, and in healthcare also we are both in the domestic market here in OTC as well as in the critical care and CRAMS, which are global businesses. So whether it's our information management business, DRG, or it is financial services, each one of them is looked actually independently, and each one of them has a good, I think, runway for growth. Both, and we are investing in all of them. So because sometimes I think financial services gets a lot more attention in the media, you may think that we are more in financial services. Yes, the capital involved there is higher, but doesn't mean that pharma and the information is not a focus. At the moment, I think all these areas we see as good businesses.
No, I'm sure you've got adequate people on board to manage all of these, but you would have to admit that by virtue of the fact that the capital allocation in financial services is more, it is a business which is probably generating better ROEs, better returns for you as a group as well. Does that take center stage is what I'm saying, not by virtue of the focus that you are giving, but by virtue of the growth that is present inherently in the financial services right now?
So to a great extent, yes, you're right, that there is more capital allocated. Also, you need to appreciate that in financial services, if you allocate capital, you can see the returns much faster. Yes. It does not take that long. In a pharma or in a information, you have to invest for 3 or 4 years and then you start seeing returns. Yeah. So yes, but in the sense that financial services has got a large allocation of capital, it is an important part of our business.
What's the growth that you foresee there? Because I hear two sides of the story out here. One set of people who've been, of course, experts and astute investors believe that there's a bit of a froth in the financial services space being created by the virtue of the valuations that the market is giving those. And there is another set which believes that the growth is just looking so robust that there's no problem in valuing these businesses at the profits or the revenues that they'll clock in 2-3 years down the line.
So as when we look at a business, we are not that concerned about short-term valuation. Sure, so let me put that. So, but I think that there is a significant growth possible in financial services. And why is that growth? As you know, that if the economy is growing, financial services normally grows 2.5 times of that. And that means that if the economy grows at 8%, 20% is the average growth of a financial services entity. The average means all the all the banks, NBFCs together, you can see that about 75% of the lending today is still done by public sector in the country. A lot of these have got issues of NPAs, there are issues of management that need to be sorted out, which means that it's the private sector, and that also they have a few other banks in the private sector itself who are saddled with NPAs. That is just this private sector and the NBFC which will have the growth. And therefore, can you expect higher growth rates? I think so. For some time, we see that this will continue to take place.
You reckon for your book, consolidated, we'll dissect it as well, but consolidated, you reckon 20-25% as a conservative estimate for the next 5 years is a distinct possibility? Or probably more? Am I underestimating?
I think it'll be higher.
It'll be higher.
Because the way we've seen growth in the current year, I expect it to be significantly higher than that.
And you're doing a lot of other interesting things as well. I mean, you already have, an SSI arm, and you have partnered with Bain to invest in distressed assets. I mean, we speak to people, and there's a lot of distress currently in the non-real estate space. We'll now be focusing as well. You already, in a manner of speaking, leaders in that real estate basket as well. Is there a challenge of asset quality issues coming up, or you think you'll be able to manage that very, very easily?
So the asset quality in us, I think we are very conscious to ensure that we grow with the right asset quality. Otherwise, frankly, it's the easiest thing in the world is to lend out money to somebody if you are not worried about collecting it. And therefore, we are investing a lot in terms of the quality of people we have, a lot in technology, a lot in processes, a lot in assessment of both credit on one side as well as the risk. And so far, I can say that we've had actually a very good track record. We monitor every account on a monthly basis to see that things are in order. So we are fine so far.
No, that you are, and I'm sure a lot of people who probably grew also thought that they will be fine. My only question is that do you foresee or a growth rate of northwards of 25, maybe 30, maybe 35 as the case may be, CAGR for the next 2, 3, 5 years as the case may be, without worsening of asset quality fears coming in?
That's what we are working towards, and that's what we are building. We've built the foundation for that, so that we can get to these. In fact, we believe we should go to higher rates than this. But that's where, so fortunately today there's a lot of experience available in this. People have gone through several cycles of good and bad, so you know what to avoid. Technology is also a big aid. And I think selection of the right credit to give the right borrower is also important, which is what we are doing.
Okay, 2 or 3 more questions on this, and then we move on to the other segments as well. Is housing finance. What are your thoughts here? How soon, if you do, would you make a foray there? I mean, that's.
So we look at various opportunities on the horizon. So there is nothing which I can give you as a time that, okay, are we looking at housing finance or not, and when we will do it? I mean, there are many things that we keep looking at.
But are you looking at entering into that space?
So we look at many areas.
Yeah. Okay. Are you looking at banking as well? I'll tell you why. And I'll quote recently. I think about 7 days ago, we did a story, and I quote that. You're in the very initial stages of exploring a banking license. You met bankers, consultants to discuss. At some point of time, you'll probably look to get into it as well.
We have, so we keep getting knowledge about what's happening in the sector, and banking is an important part. Whether we are getting it, we don't have any concrete plans as such.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.